G'day, everybody. Today is September 20th, 14:41, 2:41 p.m. Eastern Standard Time. Just wanted to show you what's going on in the market. It's not looking pretty at all. You can see here on the Yahoo snapshot of everything. Everything's seriously down. All the U.S. indices are just completely down. Nasdaq's down 3.2%. Crude is down 2.3%. Gold is up a little bit, but I'm gonna talk about that in a little bit. A lot of the Forex is down. Even our wunderbar crypto is down as well. And you can see here only the Nikkei Japan is up. So what's going on here? What I want to talk about is the reason why I don't like these asset classes. Right now, I just put up a video on YouTube on the latest crash in crypto, Bitcoin. You could see not very much loss has taken place with my testing, as well as nothing really gets traded when everything crashes because it's long only. On top of that, there are certain coins that will recover fairly fast from these crashes. On top of that, some of these coins don't even get hit at all. So because of that, this is why I like that particular asset class. Now, I will go over the CFDs and stuff. I haven't shown this in a while at all. Okay, so MotiveWave is here. I always use MotiveWave in my charts. You can see here the harmonic scans, which I've been using for a long time, fairly reliable. You'll see the big crashes here. You can see these big declines. Pound against the US dollar, pound against the Swiss franc is down, USD, Japanese yen is completely down. And these are the safe haven assets. This particular one with the yen. But here's what I've always said. Okay, when you see a crash, this is what will happen. And it's proven yet again. You can see here, now I haven't shown this in a long time, but here you can see right now we have a long on the U.S. Norway. This is typical, probably your best asset asset to be in when these crashes happen. Better than U.S. Treasury. Well, we know about the stupid spending that the Congress and whoever else is coming up with these dumb packages just to add on debt to the U.S. government, or the Fed Reserve, I should say. But you can see the amount of calls I get for the USD Norway. Look at gold. It's just flat. No performance at all. But oddly enough, it's the Australian dollar and the New Zealand dollar that recovers from it. But you would think that this would spike. But as I said in yesterday's video, gold and silver are suppressed because of the derivatives that come out of gold, which are controlled and suppressed by the banking industry. Many companies have been fined on it. Here's some interesting ones. Euro, Canadian dollar. Okay, I wouldn't say those are safe havens, but there's one that really shocked me. Look at this, Euro and Hungary. Okay, that would make sense because Hungary is a fairly strong country. Okay, you got Euro and Sweden. But you see what happens here? It starts to decline as the markets start to get a little, when things start to recover. So here you can see Euro, and Singapore is another one. The Deutsche 10-year bond, it just did not move, all due to the debt of all these countries. Netherlands got hit. Netherlands 2025. Check out the bonds here. So you get the 10-year bond spikes. So there's still a credibility to the U.S. because there's nowhere else to go. India, well, nothing really happened there. 5-year, a little bit of a spike. That's a 5-year bonds there. The 10-year, a little bit better. So the longer term for the Treasury, the better the safe haven it is. I wouldn't touch U.S. bonds if I was a freewheeler in the market right now, but I would definitely put USD Norway. As you can see here, I'm getting tons of them. So that's probably where a lot of the money will go. Look at this, USD Singapore. So they're looking for alternative currencies to go into that really have a better, cleaner balance sheet. We know about what spooked this was the Chinese markets. I've gone through the scans already. I'm not seeing anything from China with this Evergrande thing that is spooking the Chinese market, which they're doing. This is a financial contagion in the Chinese markets that could trickle back into the rest of the world, especially in the West. Now, I've done this analysis 2 weeks ago. Now I looked at the Chinese market, and it was declining, and now you know why. That would have been a great short to be in if you saw that coming. Now here is an industrial metal, and this is what they talk about inflation. This is what I don't get. This is when the inflation talk really. Let me go to a daily chart here. You can see here, starting in November till here in May. That's when the inflation talk started. And look at what's been going on with, this is copper, remember, as an industrial metal. And it's been in decline, okay? So this is where I get confused, where you hear about all this talk of inflation. But yet, and I can show you other agricultural products that are been in decline in around the same time. So I find that quite, we'll call as the words they say is interesting. Okay, Brent crude is stable. Okay, so if there is inflation, it's probably coming from energy products. You can see that, but it's not the crazy spike. That was due to a crash between here August till the 22nd of August, and then this sudden bounce back. Okay, so here you can see we have three shorts as well. France, the market there's tanking. Just taking a look at some of these also in this crash here to see what it says. Oddly enough, you got USD Canadian spiking there. As I said, this should be spiking as a safe haven. Everything's all distorted and broken. But look, we have another one of the USD Norwegian. And it's all because Norway has a clean balance sheet. Here, the lead up with the USD Swiss franc, again, that safe haven's not holding. So the traditional Japanese yen, as well as the Swiss franc, of being safe havens, no longer works. Here we have gold again, completely range, but I don't know what kind of fool would listen to a Peter Schiff saying gold, 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 when here's the latest performance since August. Now, if I show you a daily, okay, we're going all the way back to October. You look at that general trend, it's either been in decline because of the market's been stay up and improving. And then here you see this general range bound where you're not making any money with gold. Okay, that's gold and Swiss franc. And you're going to get the same pattern with any other currency when it comes to gold. This is why I despise these asset classes, because there's no growth in them. No growth. Okay, and especially if things are either going range bound and general decline. I mean, the U.S. market's been doing well. Well, I shouldn't say well, but one thing I will say, you're not seeing the U.S. markets perform at all today. Okay, you can see here, Australia, New Zealand, just in a solid decline because of this, as I call it, the global sickness, right? So you could say what you want. These are where your money's going to be, in one of these or in all of these, in a diverse portfolio, and yet generally you may not be getting a lot of great return comparative to what I've been looking at. Here you can see the odd trend here, the euro Swiss franc. Again, that's a 4-hour view. So some of these other coins in Eastern Europe, like Czechoslovakia or Hungary, seem to do okay. But right now, the one that seems to be the hot capital moves is into Norway. Here's an interesting one as well. Okay, so you know about the exotics. Look at this. Money is moving into the Turkish Lira. And that's been moving into since September 5th. That's weird, okay? That's saying that the people have more confidence in the Turkish Lira. And you're going to see that with the U.S. as well. So take note of that. Turkish Lira, who would think? So here's Thailand. I've talked about Thailand. Look good up between here, August 18th, 19th, till about here, September 5th, and it's been declined since. Again, here you have that just going nowhere 30-year Treasury. Same with a 2-year. This is just an overall picture of the U.S. Treasury. People have lost confidence in it. And as I said, when it comes to the overall assets that you look at here, very few currencies in U.S. dollars show up because people have lost total confidence in the U.S. dollar. It's in Norway. It's now in Turkish Lira, Singapore. It's all because of everything's been accelerated because of these crazy solutions to the global sickness. Definitely things are falling apart. That's why I don't look at this stuff a lot, but I do here once in a while just to show you what's going on. Look at the USD Japanese yen. How can you make money there? Very hard. Even the USD Norway. Okay, and here is what I want to show you here. Look at this. Since September 7th, look at that price there, 830 to 867 with the Turkish Lira. Okay, I mean that is pretty crazy return. Okay, with the Turkish Lira. Okay, WTI is the same as the Brent crude. Okay, let's look at natural gas here. Natural gas did definitely bounce back August 25th to here, September 15th. You know, you're looking at a price here of $5 to $5.50. That's a 10% return. So now it's fallen back. Here you got sugar. Okay, I've talked about sugar as well. Again, let me show you. You can see here starting August 15th, it's been in decline. It did spike a little bit from the July till mid-July, July 11th to here, August 19th, and then it's been a steady decline. Again, when you look at the one-day chart, similar pattern, there is a bit of an inflation and a decline here, no different than here, March. So definitely sugars are definitely a good long-term trade if you want to do buy and hold. Let's check corn as well. Now here, again, look at this. Since July 21st to today, it's been in a solid decline. Again, inflation. Where? This is in a base agricultural product. Okay, and it's been in decline. Again, let's talk about what's been going on. Last October till here in the peak, May, no different than copper. It's been in that. I mean, you're looking at 13.7. Sorry, what's the price here? 369 to over 720. Okay, for sugar. So now it's been in decline. So now, is really inflation kicking in? That doesn't make sense. They keep reporting it, and it's the base agricultural product is not the problem. It's somewhere, be it processing, be it distribution, something is continuously driving up the price. And they'll probably blame it on, you know what, the global sickness, of course. Okay, so this is a reflection of China now. So here, we got the Canadian Hong Kong dollar. So here, July 29th, right? Price 625, so now it's dropped back about 5% to 603. So this is a good analysis of where things sit when it comes to Hong Kong and China. Hong Kong generally has been pretty good, but since the clampdowns in China, and whatever, crypto, soy boys as they call them, and celebrity and all that, now the housing market, that's the effect it's had. You know, peaking here in June 4th, and then been solid decline. And I don't know. I can go on and on and on about it. Everything else has been pretty well range bound. Here again with that clamp it down in Australia, or even New Zealand, from the pound here August 18th. Big decline there over a month to the 5th of September, and just been flat since. This is why I'm not really excited by these coins. There are some growth, but comparative to other digital currency assets, if you know what I'm talking about, you know there's some growth here. So here, New Zealand Swiss franc, okay, that's looking good. Defense trade, that worked out. But who's going to find that? Here's the last one. Now, I keep talking about this indicator here, which is pretty solid. XAU, gold, silver, XAG. This is really a good indicator of what's going on in the market. When that spikes, that's something to really pay attention to. So it's been spiking since August 8th, gone flat till about the 18th, and it's been really spiking since the 15th of September, and boom. Now, if you look at the weekly view, this is very relevant because you could see here, starting last year, it's been increasing. Okay, so April, okay, so look at how far back we're going. March 12th, 2017. It's been the trend of this asset, which is so reliable. Again, gold-silver ratio. This has been not spiking, but increasing, let's say April 2017 up until January 20th. So you knew things were not doing well, okay? Then along comes that global sickness, and look what happens. Like, this is a big spike here. Goes from 85 back in December, 86, all the way up to 120. So it's gone up 50%. And since they started bringing out the medicine for the global sickness, and then a sudden decline. But look, it's starting to spike again, okay? So this is what we're looking at. Now, let me see if we can go back maybe monthly. Oh, so this does go back. So, okay, so this is really good. So this is started in January 2007, okay? Now, this is all the way into data, but I think this is really reflective. Look at what's been going on. You've got a spike, okay, January 2009, okay? So it's gone from 51 to 78. So roughly a 50% increase. We have a solution to the problem till January 2011. And look what's been going on. It's been trending up. Look at the volume here. Look at that volume. It's picked up specifically between January 2017 and January 2019. So there's been a lot of uncertainty here, and then it quickly drops off. Here, no one pays attention to it. Maybe no one's trading. I don't know. But it just spikes as that trend really kicks in again from November 1st, 2019. Okay, where it's at 83, and it peaks, let's say here, to 114, which is quite high, drops back and starts to spike again. So this is party time here when it declines, and it's starting to spike now. This is a really good indicator to watch over overall trend, and I'm going to leave it at that, okay? So here's the thing. What do we do about it? What are we going to do? What we need to do is two things. Well, a couple of things. First, if you go to my website, quantlabs.net, if you like this sort of talk, okay, you want to come over to quantlabs.net, click on the contact, get on my daily newsletter, okay? That will get you back into my CRM software. The next thing you want to do is get on our chat server, okay? The chat server is really, really useful. I put a lot of private information there. I've said I'm slowing down my posting on the blog, but here at quantlabs.info, I post more on that now and more responsive. And as I put up my previous video, I've got 2 bots in development now, and they're just one's retweaking in the spot market on Kraken, U.S. based exchange for the digital currency, on top of the futures or derivative market for the same exchange. That's where you could do really well. I do think that the digital currencies will roar back as we start to see this start to spike again. Okay, because I've shown here that typical safe havens are not working out. Gold is suppressed, as I said. There are some currencies that are proven themselves. I would not be putting a lot of money into anything U.S., anything Treasury or bond. I'd be just avoiding it like the plague. And then the other places, as I said, the Norwegian currency as a safe haven. That's proven here in these charts. And that's why I use them, because they give you, they're not so U.S. centric. It's global. And I think obviously people don't realize, especially in the U.S., people always think that the world revolves around the U.S. It doesn't. And so there's that, what they say, rest of the world, what they're doing outside the U.S. So you can clearly see what's going on here. So we're going to leave it at that. But get on those two resources again on the server, chat server, and that's kept private as well. No third party whatsoever. Quantlabs.info, or get on our newsletter, quantlabs.net/contact. We'll leave it at that. Thanks for watching. Have yourselves a good day.